Welcome to FT Markets. This week, the European Central Bank is widely expected to launch a program of quantitative easing in an attempt to lift inflation and rescue the Eurozone from the threat of stagnation. But will this scheme work? Discussing this with me today is Alberto Gallo, Head of Macrocredit Research at Royal Bank of Scotland. Alberto, let's have a look at the first chart which you brought with you today. And this is a chart really showing what investors think of QE and whether it will work.
Well, the big question is, will QE make Europe just a good trade or actually a good investment? So what people are saying in the market is that QE will work, but only in financial markets. That's what half of the people are saying, while a quarter is saying it's not going to work at all, neither in financial markets nor in the real economy.
So there is a lot of skepticism on whether it will actually have an effect, in particular on growth. We see maybe something could raise inflation, but on growth there is very little optimism. And one of the reasons for this skepticism is in your second chart. So guide us through it. Why do investors think QE will not help growth?
Well, QE is working, to be fair, in some respects. For example, it's boosting exports with a lower euro. The euro has fallen already a lot. But then if you think about confidence and consumers or investors, corporates, then look at this chart and you see that really when wealth increases, only a few people are spending. The top 10% of the population, which is actually the people who benefit from QE, are
the ones
spending less.
Holding the assets.
Holding the assets, the richest people. And also people in countries which are doing better, like Germany, are spending more than countries where the effect of QE is needed most, for example, in Greece. So if you're in Greece or Italy, you're worried about your job, your salary, QE is not going to make you go on a spending spree. Similarly, for corporates, investment does not really lead. Investment in corporates will come back if there is a government program to stimulate investment. Corporates are saving. And finally, credit in Europe is still stuck because it depends on banks, unlike in the US, and banks are still focused on capital rather than on lending. So only the FX transmission channel works. It doesn't mean that QE should not be done. It's our only weapon against deflation risk, but its efficacy as it stands by itself is limited.
Now, and let's move on to your third chart, which is really giving us a long-term picture and is showing that actually there is something else which Western governments, the US and the Eurozone, should worry about, which QE can do very little about, and that's the accumulation of credit.
If we take a long-term perspective, what we see is that credit has grown to multiples of GDP over the last decades. And very often, too often, monetary policy has been a tool used by governments to fix fiscal policy mistakes. Probably, my impression is we're not learning from the past. Today, Fannie and Freddie in the US are lending again to the riskiest households. In the UK, we have the Help to Buy program, favoring again a rebuild of leverage. And if you look at the US cycle, the US is now re-leveraging. It is okay for now, but it could create problems in the future. Europe is struggling to fight deleveraging and deflation. So there is a contraction in lending in the green. Yeah. In the green credit market, in the European credit market that Europe is fighting against. But eventually the problem of debt sustainability will come back. There is simply too much debt, no one wants to take the losses, and the question will come back very soon, for example, in Greece.
Thank you very much, Alberto Gallo, for being with us today.
Thank you.
So Mario Draghi will fire his big bazooka potentially this week, but there remain a lot of problems for the Eurozone ahead.